hey everyone, thanks for showing up. Really appreciate it. It's the first time we're doing our house hacking virtually. Apologize for any technical difficulties, but hopefully we don't have any. Knock on glass. So my name is Michael Bennett. Note to self, introduce yourself. I would have forgot to introduce myself without that. And I'm here with Adam Unger, both
Hello.
brokers with Atlas Real Estate. So thanks for coming. We're going to talk about house hacking. If you have questions, throw it in the Q&A. I think you're all probably muted, but if you do want to, just jump in, you got something important to say or a great question to ask, feel free to unmute yourself and ask away. Oh, nice, we're up to 16. Cool. And Adam, you can still see my screen, right?
Yes, sir.
All right, awesome. All right, let's get this thing going. Who are you? We want to know, we really do. I'm pretty sure you can raise your hand on this Zoom meeting. So if you want to raise your hand, if you own real estate, we'd love to know. If you're in your mom's basement, also a really valid reason to raise your hand. All of that is good. Why are you here? We want to meet you guys, learn more about you, learn more about your goals, answer your questions. Want you to be brave, ask questions. That's why we're here. I've got this photo of Kanye West on here because I'm a huge Kanye West fan. And there's a quote, you can check it out on YouTube, where it seems like Kanye just learned recently that you can buy real estate in America. And he and Kim are very bullish now on real estate. They own like 10 or 20,000 acres of ranch land in Wyoming. So if you haven't heard, it's big news. America is for sale. So go and get you some. That's what we're all about. So problems to solve while you're here. Maybe you're still living at home. Totally okay. We can fix that. You can fix that. Maybe you're not living at home. You're paying rent to somebody else, but it's tough to save. You don't have enough money left. You don't have enough money left over to invest. Retirement. Do I have to work until I die? I think I ask myself that question every single day. And more often than not, the answer is no. And you don't have to either, especially with real estate. Protecting the value of your money, right? You're going out there, you're working, you're making money, but the sneaky inflation tax is the worst tax of all. And we have to protect the value of our dollars. And we can do that with assets like real estate. And let's be honest, we want to get rich. I'll raise my hand. I do. You can too. This image, this is Scrooge McDuck swimming in his vault of gold. I think I first saw this movie. I don't even know what movie this was, but I saw it when I was a kid. And this image has always stayed with me. I love gold. I love real money, real assets, like real estate. You only see a few dollar bills in there, right? Mostly gold, mostly real money. Before we get into house hacking, we just want to go through a COVID-19 update here with regard to the real estate market in Colorado. Specifically, this is Denver. If you're interested, we have these same charts and graphs for Colorado Springs, for Fort Collins, as well as the Phoenix area. But for the purposes of our time here, this information is just for Denver, but it is fairly representative of what is going on the Front Range. So you see up here in the top left, new listings by week. After a major drop, we are back almost up to 2019 levels, which we had been tracking since December. So listings have come back up almost to where they were a year ago. You see the same type of graph behavior with homes under contract by week. We're back almost up to 2019. So a lot has happened here in the last 2 to 3 weeks. Days on market, we were down and again, back up almost up to 2019 levels, or close to 2019 levels. But days on market, we're actually down here. I think we're hovering around 19 or 20 days on market. So it just tells you that Denver remains a really hot market for real estate. And then your average sales price by week were actually above 2019 levels again for your average sales price by week. So really some good signs for the Denver market. I think, 7 weeks ago, there was a lot of fear that these charts at this time would look a lot different. So we're really quite pleased with where we're at. And then I don't know if any of you know out there, but Atlas is also a property management company. We manage over 3,300 total units, most of those here in Colorado, another 500 or so in Phoenix. And in April, we were just over 95% of our occupied and collected rental rate. So about 3% down from normal levels. But I think we were all pretty pleased with that. Those numbers could have been a lot worse. So April was really good, and we're so far looking good in May so far. We're actually ahead of where we were in April at this same time of the month. So a real quick summary on that. 2019 to 2020, not a big difference so far in the Denver market. Pricing, days on market, listing, homes under contract. That was a different story 2 or 3 weeks ago. But with the safer at home order now in place and showings being allowed again, things have ticked up. What are the experts saying? So Zillow, and Atlas is a partner with Zillow. They've got probably the most real estate data of anyone right now, and they have it in real time. If I have a search set up on Zillow, and 2 months ago I was looking at $500,000 houses, and now I'm looking at $400,000 houses, Zillow knows. So they've got the best data out of anybody with the most highly trafficked real estate website in the country. Their worst prediction for home price depreciation is 4%, and their forecast is really 2 to 3%. So whereas in 2008, we saw some markets with a 30+% drop in home values, no one, including Zillow, the expert right now, is projecting that sort of drop in prices. It's on like Donkey Kong. This is a quote from Redfin CEO Glenn Kelman, talking about what they expect will be an exodus out of major cities like New York, Chicago, San Francisco, perhaps some more congested areas on the coast. And what they're saying is that, due to all the social distancing, and who knows how long this new norm for us will be around, maybe forever. More people who are in those congested communities, those high-rise cities, are expected to move out. And Denver already has one of the highest net migration rates in the last decade in the entire country. So, people looking for a little more space, some breathing room, neighbors not so close, some Rocky Mountain fresh air. Maybe we see a continued increase in net migration to our neck of the woods. What are the risks of waiting? So let's say, hey, 4%, that's a big drop. I'd rather wait until that 4% drop actually happens for me to buy real estate, to get in the game. Well, there are some risks to doing that, and maybe you have to wait, right? Maybe your lifestyle, your financial situation just determines that you have to wait. But if you don't, if you are ready now, stay ready. You don't want to miss out on the equity gains that you're going to get from debt pay down. And as a house hacker, your biggest return on investment will be equity from paying down your debt, simply paying your mortgage. And that'll be somewhere in the tune of, around $5,000 to $10,000 a year, depending on the type of property and your interest rate and so forth. Interest rate hikes, another big risk. Interest rates are so low right now, historically low. I just locked in a refi at 3.25. I heard of another client getting locked into a single family under 3. So this is incredible in terms of interest rates. And could those go back to 4, 5, or 6? Yeah, it's totally possible. So you definitely run a risk of an interest rate correction or hike if you wait. And that would certainly negate or cancel out a potential drop in home prices. Experience is a big one. Adam, I don't know about you, but when I made my first offer, I was really nervous. I don't know why, but I just was. And you know, by the fifth offer, it happened in an instant. It really didn't have to think about it.
Yep.
Yeah.
A lot of emotion involved in that.
Totally. Yeah. It's, you know, it's the most expensive thing you know, you've ever bought in your life. Certainly on the first one. So experience is big. That really can't be overstated. And again, I talked about this with Scrooge McDuck. You have an inflation risk to just keeping cash in the bank. You know, stated inflation, I think officially is somewhere in the neighborhood of 2 to 3%. In reality, that's probably a little bit higher. You also have a stock market risk, right? You have to put your money somewhere. There is no truly safe place to put it, but we believe that real estate is one of, if the not safest place to put your funds. And real estate is hyper local. Denver is an incredible market. And if it is on like Donkey Kong, like Glenn Kelman says, then we may not have any drop in prices by year end. Maybe we go up. This quote from Zillow was talking about the US market as a whole. And we're talking about Denver, right? So I'm sure there are going to be pockets and neighborhoods and cities and regions that are affected much less than others. And we know and love Denver as a long-term real estate market. So let's get into house hacking. Actually, Adam, I'm gonna pause. Do we have any chat or questions that we need to get to?
We've got a question from Harley asking about a lease option to buy. So Harley, I think that we should chat on that offline because I don't think that there's really a standard to that, but I definitely have some opinions on that. So you got my number. Call me after this and we'll chat about it.
Cool. And Nicole mentioned that you guys can't unmute yourselves. So sorry about that. It's probably better if you just chat it anyway, unless we can.
Yeah, throw it in the Q&A or the chat and we can hop on it.
Yeah, cool. And then Stella asked, will I be able to get the COVID charts for Colorado Springs? Absolutely. Yes. Stella, shoot us an email and we will get those charts to you after this. Awesome. We have a Q&A as well. Oh, that was Harley again. Okay, cool. So what is this house hacking thing? It's a millennial term. They want to hack everything. I don't know when everybody became a hacker. It's just called buying a house. And a house could be a single family house, like the one I grew up in, could be a townhouse, could be a duplex, like the one I'm in right now, could be a quadplex or a triplex, could be a condo, but buy a house. And when I say buy a house, we're going to buy smart. So we're not buying flashy condos in low-high because those are incredibly expensive, and the rents that you have to get to make those work as investments are they're really high, and that creates more risk for you. So you simply buy a house, and it can be any type of house. You are using owner-occupied interest rates. So as an owner-occupant, you can get incredibly low interest rates. As I said, we have historically low interest rates right now. It's not free money, but it is pretty darn close. So you are going to buy it as an owner occupant and live in the property. Now, when you do that, you could put very little money down, 5%, 3.5% for FHA. I think there's also a 3% conventional. If there's any veterans out there, thank you for joining, by the way. 0%. You could put zero money down and buy up to a quadplex. It's incredible what you can do as an owner-occupant house hacker. Roommates or tenants are going to help you pay your mortgage. And we'll go to an example later of how, if you're currently renting, how you can reduce the actual out-of-pocket expense you have for your living expenses right now by having just a couple of roommates help pay down that mortgage. You can do this every 12 months. You can probably do it even a little bit faster if you move for work, you have a major life event, you have to move or buy a different type of property. But generally, what you sign on your loan documents is that you have the intent to live in this property for at least 12 months. And this is not complicated. It might seem complicated, and I think, you know, the more books you read and the more YouTube videos you watch, the more complicated it will seem. But really, it's quite simple. You know, I found out, I remember now that my parents, when I was really young, the first house that they ever bought, we had a roommate, and I think he was a guy from their church. Real nice guy. I hardly remember this. I was super duper young, but he rented a room in our house. And, you know, I was born into a house hacking family. I had no idea. And I remembered it not that long ago. So it's really not that complicated. It's as simple as that. But I own stocks. Adam, do you ever get this objection from your clients? You're like, hey man, you really need to buy a house. It's a great investment.
Yeah, I've gotten it, but it's a pretty easy argument. It's, you know, you want to have some diversification, but real estate.
Absolutely. Yeah. And this objection it's like Adam said, it's kind of an easy one to overcome, and it's even easier right now. Now, I have nothing against stocks. I own lots of stocks, but I am converting stocks to real estate because I think it is a better investment. So let's just take a theoretical $20,000 down payment or a $20,000 initial stock purchase and compare the two side by side. So maybe this is in an actual stock portfolio, a 401k, an IRA, and you purchase $20,000 in stocks. We're going to assume, for the purposes of this example, a 7% annual return, because that's what that guy, the Oracle of Omaha, Warren Buffett, says that we should realistically expect over the long term in the stock market, and a 30-year hold time, because the comparison we're using is a 30-year mortgage. That $20,000 in 30 years, if you don't add anything to it, you just let it sit, is going to turn into over $150,000. Now, that's awesome, right? That's a win. Turning 20 into 150, that is great. And I don't discourage people from doing that. But if that's your only 20,000, I want you to think about something else. What if you bought a house instead? What if you use that as a 10% down payment on a $400,000 house? On that house, you're going to have a $380,000 loan. And I know we've got closing costs, and maybe there's some rehab and paint and that sort of thing. But just to keep the numbers simple, we won't consider those. And we have this on a 30-year mortgage. If all we do is pay the mortgage, right? We don't get any appreciation, none at all. We just pay the mortgage, and that home doesn't go up or down in value. After 30 years, we have an asset worth $400,000 that's completely paid off. Now, I did my best in college to only take art classes and no science or math, but I would rather invest in real estate just on these numbers alone. Just pay the mortgage, but there are a couple of bonuses. So once that house is paid off, we can do something with that house, right? It's not sitting empty. And if we're not living there, somebody is. We're renting it out. And if we just take a starting rental rate of, I think I used around $2,000 at a 2.5% rental rate appreciation over 30 years and subtract 30% out for expenses, we are netting over $35,000 in income every single year, passive income. This is incredible. Even on your $152,000 stock portfolio, that's not income unless you're primarily in dividend producing stocks, and dividends are very low, historically low. I think the S&P right now is paying around 2% in dividends. So $35,000 in yearly income, passive income, is much, much higher. And if you're looking to retire, how many houses do you need, right? If your retirement timeline is 30 years or 35 years, how many houses do you need at $35,000 each to have a comfortable retirement? For some of you, that's 2, maybe 1. I think mine's more around 5. So I'm fancy. We have another bonus, equity. Now, I promise you, if you buy a single family house in Denver, you're going to get appreciation in 20 years. I promise you that. there is no chance that that house remains at $400,000. Just with inflation alone, we're going to get at least 2% increase in value over time. But if we get 3%, and this is actually really conservative, I believe in Denver, what is our average rate of appreciation over the last 20, 30, 40 years? I think it's closer to 5% on single family homes, 4.5%, 5%. If we use 3%, the value of this house jumps to almost $1 million, $970,000 in equity, fully paid off. So you are getting yearly income of $35,000, and you're sitting on an asset worth close to $1 million. I mean, that is incredible. You know, when I was growing up, you know, my parents and my elders, they said, hey, you want to build up a nest egg that you can retire in. You want $1 million in the bank. It's hard to save up $1 million bucks. But through the power of real estate, we can do just that. And what is this? What is that guy doing? This is a portion of a painting by this really cool painter. If you don't recognize this, his name's Thomas Hart Benton. And he did all these paintings around the industrial age. And everyone in this painting is using leverage. They're using levers to lift things, to move things, to turn things. And leverage is why real estate is so powerful. And it frankly is what built America. Leverage, the ability to make things much bigger than ourselves, and to move objects much heavier than ourselves. And we don't traditionally leverage stocks. Warren Buffett probably can, but he probably only does that with a very small portion of his portfolio. But the norm is to leverage real estate. And if you buy smartly in the way that we teach, you can leverage in a very safe way and leverage your $20,000 into a $400,000 asset that is going to grow over time. This is a Snickers wrapper, actually 4 Snickers wrappers. So a Snickers bar in 1930, when it first came out, it was 5 cents. Adam, what does a Snickers bar cost these days?
I don't know, maybe $2 probably.
Maybe $2. Yeah, I think I plugged in 5 cents, and you know, the Snickers bar came out 90 years ago. And if you put in 3% appreciation over 90 years on 5 cents, you end up with like $1.25. So everything will get more expensive over time due to inflation. And in a market like Denver, you're going to get appreciation on top of that. So I promise you that $400,000 is going to be much more valuable by the time that house is paid off. So quick summary, why should you house hack? You're going to lower your monthly expenses, and we'll get into an example. Your friends need a place to live too. I know when I first, got out of school and was in my 20s, I lived with friends and we were all renting a house. Why not buy a house and rent back to my friends? Adam, didn't you do that?
I sure did. Yep, all the way up until about a month before I got married, which was a year ago.
So your wife was not on board with
I mean, we thought about continuing it, but married life with the roommate. So.
Okay. It's all about
but it's always a backup plan if we decide we want some extra cash in our pocket, or if things get rough.
Yep.
It's always nice to have in your back pocket.
You've got the option. Yeah.
Yep.
Exactly. You get paid 3 ways in real estate. Appreciation, which we talked about. I promise you're going to get it. You've got a long-term view. Debt pay down. A portion of your mortgage payment is going to directly to principal, and that becomes equity. And then cash flow, which we'll talk about. So 3 ways you get paid: appreciation, debt reduction, equity, and cash flow. And then you just let real estate do what it does. It's a business, but it can be a passive business that is run for you, especially if you use Atlas for property management. So we're going to go through 3 examples here. Here's my first house. This is a duplex in the West Colfax area of Denver. Cute little, somebody told me when I got this appraised that it's a raised ranch. This is a raised ranch with a basement apartment. We put 5% down. Our mortgage all in on this property, and that includes private mortgage insurance, PITI, principal, interest, taxes, insurance, is $2,850 a month. When we move out and rent out this whole place, we should net $3,200 in rents, even if that's a little bit lower, even if it's 3,000. You know, if COVID is affecting rents a little bit, at least on what you can raise, we're fine, we're clear. And then the value in 20 years, that again, using a 3% rate of appreciation, almost $1 million. So, and then we plug in our 2.5% rental appreciation, back out 30% in expenses, and this should pay us at least $45,000 a year in passive income. And again, how many of these do you actually need to retire? You know, before I got started, I read a lot of books, I watched a lot of YouTube videos, and these guys were talking about how, you know, you needed, you know, if you're going to cash flow $200 a door, well, how many doors you need? 50, 100. And I was like, how am I going to buy that many houses? That just seems impossible. But through a measured approach, you really don't need that many. So the process is just to rinse and repeat. This is Adam's first house. Adam, you want to tell us about this place?
Yeah, so I bought this place in 2008. I moved from what I like to refer to as my bachelor pad that I was renting in Green Mountain. Took 2 of my roommates with me to the new house, to my house, new to me, and rented the rooms out. And I believe I was paying $100 a month for the first 2 years. And while I was doing that, I was building up my nest egg. And of course, buying toys and dirt bikes and stuff like that because I was young and having fun. But it eventually turned into my rental property. And right now I'm actually I'm renewing my lease this month, and it'll be $2,300 a month. My mortgage is $900 a month. So right there, I've got some built-in cash flow, and that's what I'm doing with each one of my houses. So that's just my first one.
You've got a huge amount of cash flow. I mean, this is
Big
a home
time
run,
cash flow.
right?
So I'm
this
actually
is a home run.
Right back to that leverage slide. I just pulled a home equity line of credit on it, and we'll be pulling $180,000 out of it so that I can go buy some more.
Piggy bank. That's awesome.
Yep.
That is awesome. This next hack is from one of our friends, David. And his first house was actually a triplex in Lakewood. It's actually only a couple of miles from my place. And he splits his property with his brother. They use an FHA loan. They put 3.5% down. Their mortgage all in is $3,250. They're getting $4,000, over $4,000 in rents. And David is a really good house hacker. I'm not very good. I'm like a C-level house hacker, but David gets an A+. He actually rents out through Airbnb his bed in his room, and he sleeps on the couch and nets himself an additional $600 a month. I mean, you can get really creative. But again, I'm married. We're not renting out the bed. But if you can make it work, you can get very, very creative and really juice your returns.
When you can, you should.
If you can, you should. Yes. And the value of this place, again, really conservative 3% rate of appreciation, $1 million property in 20 years. And rental income of well over $50,000. I mean, it's really incredible. We have a chat. Calvin, I'm going to rent my bed. I love it, Calvin. I love that. So here is an example. This is nobody's house. Actually, it's probably somebody's house by now. But when I pulled this off the MLS, it had just been listed. So this is our easily achievable, no work, not magic deal of the day. You like that title, Adam? I came up with that.
That's good.
Beautiful home in Littleton. I mean, as you can see, this home's in great shape. It's got, a brick and wood siding exterior, 1-car garage, probably around, 1,800 square feet, something like that. Really nice home. 3-bed, 2-bath, listed for $395,000. And the all-in payment, assuming, I think I assumed 5% down with 3.25% interest, was $2,150. And if any of you are renting a room in Denver right now, just a room, and that number doesn't look right to you, let us know in the chat. But from all the people I spoke to, $700 to $900 seems like a pretty reasonable rental room rate. So if you buy this house and you just rent out 2 of the rooms, that's $1,600 towards your all-in payment of $2,150. And let's say you're going to also take it a step further, maybe not rent your bed, but let one of your roommates take the garage space for his jet ski or his motorcycles or his car or her car. And we can get $50 for the garage. You could probably get a little bit more. But you can take your $2,150 payment and reduce it by $1,650, which leaves you with a $500 payment. So, you know, that's less than what your roommates are paying per room. And this is the power of house hacking. This deal is just sitting on the MLS for anyone to buy with 3.5% down or 5% down. Again, not magic, no work, easily achievable deal. And if we take a current rent of, you know, I think I assume $2,100 once we move out, but apply 2.5% appreciation to that, our rent in 24 months should be somewhere in the neighborhood of $2,400. And that is going to give you the time and the space and the savings on your living expenses to save up another down payment. So let's say you currently are paying, you know, for a 1-bedroom, you're paying $1,400. If you can reduce that payment down to $500, $400 and save, you know, $10,000 a year, in 24 months, you're going to have another down payment or pretty close to it. So that's the power of house hacking. Saving money now and the ability to buy another house pretty soon in the future. Now, when you're a house hacker, you can see here, there are going to be some expenses. You know, you're not really going to cash flow very much. If you do, you rent the bedroom, maybe you can eke out a little bit, but you know, it's not retirement money. It's not a huge amount of cash flow. So the bulk of your return here, your ROI, is going to be on debt reduction alone. And I think I mentioned earlier that we can expect debt reduction of, you know, somewhere in the neighborhood of $5,000 to $10,000, depending on all the variables. But you're putting down, you know, $20,000 and getting a 30% return on that investment. That is much better than the 7% we can expect in the stock market. And that's pretty much assuming no cash flow or very little. So these deals are not particularly hard to find. You just have to know what you're looking for and have a strategy that's going to work for you. Adam, how are we doing on time? I think we have until 1, right? We got about 22 minutes.
Yep, we got some time here.
Cool. I'll try to talk a little bit faster. Mistakes. You're going to make mistakes. I've made mistakes. Adam, I'm sure you've made a few mistakes. A big one is over improving, right? We have to remember, we're not going to live in this house. At least if we are, it's going to be for a pretty short amount of time. But for the majority of our ownership tenure in this home, somebody else is going to be living there. So don't spend so much money over improving the property. Rented to hot twins. Our VP of our investment brokers, our managing broker, who now owns something like 55 units or something. One of his first properties, he rented to a couple of hot blonde twins. And this was, you know, it didn't seem like a mistake at first, but they brought a 3rd roommate in. And when they got in a fight and the 3rd roommate decided to move out, she, well, the twins decided that they weren't going to cover her portion of the rent. And Mike just went along with that because he didn't have a good answer to the twins. So he was paying their 3rd roommate's portion of the rent. Don't do that. I don't think you can discriminate to renting to hot twins, but just don't pay their rent. Look at the lease. They have to pay. Rented to growers. And I'm not talking about tomatoes. Actual growers. Don't do that. Actually, it's probably okay now. This is Denver. Mia raised her hand. Mia, did Mia have a question?
Unfortunately, I think she'll have to put it into the chat.
Okay, cool.
Unless you
Mia,
unmute everybody.
yeah, throw it in the chat, Mia, if you can, or the Q&A. Didn't go inside for 9 years. Another story from one of our brokers. Didn't run applications. You know, run your applications, your credit checks, your background checks. We can help you with all that. But despite all the mistakes, everyone still made money. And that really is the power of real estate, the power of house hacking, is you can probably make all these mistakes and still make money. It's really just about getting started. So despite those mistakes, house hacking wins. I think you can see me and Adam are not all that smart or that special. There are immediate benefits to this. You can immediately reduce what you're paying now for rent or get out of your parents' house. So immediate benefits. You're creating long-term value. And this is really an important one for us. We want to be good stewards of our community, and providing safe, clean, affordable places to live for people is incredibly valuable to your community. So you're creating long-term value for somebody else, and you're creating financial freedom for yourself and for your family and potentially for your heirs. The rules are written in our favor. I talked a few minutes ago about the VA loan, putting 0% down in order to buy property, putting 3.5% down, and being able to buy a triplex. I mean, this is incredible, right? If the government didn't want us to do this, those rules wouldn't have been written that way. So clearly, the government and the economy wants us to invest in real estate. And you can all do this. I firmly believe that you can all do this. I've seen it happen. Now, who is Atlas? It's two guys on a computer screen. Who the heck are you guys? Well, we're investors first. All of our brokers own real estate. Some of them own lots and lots of real estate. So we are investors first. We have experience. We're all owners helping owners. We're also a property management company. We manage over 3,300 units. More than 2,800 of those are here in the Front Range in Colorado, and another 500 or so in the Phoenix market. Zillow chose us. I don't know how many of you know, but Zillow buys and sells real estate in about 25 markets across the country, one of those being Denver. And they chose us to represent them exclusively as their broker partner. So for every single home that Zillow has bought and sold in Colorado, we have been their broker. And they chose us because we have the experience, we have an incredible team, we have the ancillary services like property management that we can offer to Zillow's clientele. And we have a very good track record of being able to value properties and buy correctly and sell correctly. We're long-term players. We've been in this business since 2009. Atlas, we were started in 2009 as actually a home flipping company. So we've been in this market and in this business a very long time. And, you know, we're awesome. As you can see here, a few Atlas employees up at Aloha Beach, a really cool community in Denver, up on a lake where you can wakeboard. So we're awesome. Adam, do we have some questions that we need to get to? I know I want to get through the rest of this presentation. I'll leave about 5 or 10 minutes for Q&A.
We had one question about some financing, asking what Denver banks are offering 5% down loans and how the local lenders are reacting to the COVID impacts. So I just suggested that our preferred lender, Nicole Ruth, is doing those types of loans right now, and that she would be a good resource for that. But if you have anything you'd like to chat on that, looks like Nicole's jumping in. She could probably take that one and run with it.
Yeah, and I think Nicole, that I allowed you to talk.
You did. Can you hear me?
Okay, cool.
Yeah,
it worked. Yeah, we can hear you.
Yeah, so we are still doing the 5% down and 3% down for that matter for conventional primary homes. So, you know, an example almost identical to one of the ones earlier in the story is my son. Both my sons now have bought a home. Mike helped my oldest, and another friend helped my second one, and they both bought homes for about $400,000, and they're house hacking the rooms. And they both had the opportunity to put 3% down and got very low, you know, 3.125 and 3.49, I think, are the two different rates they got as owner occupied. So of course COVID is happening and it's restricting some of the things that we can do, but an owner occupied primary home is not one of them. That is alive and well. It's more the cash out refinances. that are struggling a little bit, the jumbo loans, and then the bank statement loans.
Awesome. Thanks, Nicole. Hope that
Which has
helps
also been
answer the
referred
question.
to as the stated income loans, correct, Nicole?
Yes, stated, it used to, well, back in 2006 and 7, we had stated loans, literally that you stated you were an engineer making $150,000. Now you have to have 12 months of bank statements
Gotcha.
showing the deposits that you're making. So it's more than a stated, but it doesn't require pay stubs or other documentation. You can use bank statements because a lot of self-employed people write everything off when it comes time to do their taxes. So it gets around that.
Awesome.
Nicole, what if I had stated that I was a pro football player, a tight end for the Denver Broncos?
You know, had you bought a home in 2006, you could have done that.
I would have bought in Greenwood Village and lived next to Mike Shanahan.
And then you could have walked across the hallway and bought another one. I mean,
Exactly.
it's a totally different world.
Oh, that's funny. Thank you, Nicole. So Atlas's investment thesis, back to who Atlas is, we believe in a 20-year outlook. If you come to us and say, hey, I want to get into this hot Denver real estate market and I want to get out in 2 years, 3 years and make a bunch of money, then I don't think we can work together. I can't work magic like that. I have no idea what's going to happen in 2 years, 3 years. I can pontificate and throw a thesis or a hypothesis out there all I want, but I really just don't know. What we do know with a pretty high level of certainty, what we do believe with a high level of certainty is that in 20 years, that Denver will be a much stronger real estate market than it is today, in a good way. We believe in cash flow, yield, or mailbox money. We want to make sure that what you buy can cash flow. We have some investors that are taking investment money that they had previously had invested in markets like San Francisco and New York, and they're moving it to Denver. And when they see our model on the investments that we're showing them, they're confused because they see a positive cash flow number. And this is the first time that they've seen positive cash flow on an investment. They were relying purely on debt pay down and appreciation to make money. So we believe in buying investments that will cash flow. Path of development. We want to buy properties that are in the path of development. And simply what this means is that we want to buy near city centers, not out in the boondocks just because property is cheap. We want to buy near in communities where you have parks, where you have amenities, where you have restaurants, where you have good schools. So we want to buy in that path of development or in what we think will be the path of development in the very near future. And lastly, property management. We will not sell you a property or advise you to buy a property in a market where we do not offer property management, because it's a major pillar of investment success is properly managing a property. So we're only in the 3 markets here in the Front Range, Fort Collins, Denver, and Colorado Springs, and all the smaller communities in between, as well as Phoenix, where we have Atlas AZ. Who Atlas is not. We are not gurus. Anybody gone to a guru presentation? Anybody ever done that? I'm not totally opposed, but I'm not doing it because a guru wants me to. So we are not gurus. We cannot replace your day job yet. Eventually, yes, we will. We will help you retire, but you're not going to buy your first deal and replace your day job. We will not make that promise to you. We will not lie to you. If you've never done this before, we are not going to treat you like a rookie either. We want to be your partner. Let's do this together. And let's change the way you think. Let's change the way you think about money, about assets, about retirement, about life, about financial freedom. So what are the next steps? It seems like years ago when I was able to go to a coffee shop and share some espresso with somebody. But hopefully we can do that again. So let's talk on the phone, let's text, email. You know, if you want to meet in person, I think we can meet at our office if that's open. Hopefully, you know, restaurants and coffee shops do open soon. We'd love to take you out for coffee or lunch or dinner. But let's just talk. Let's get to know each other. Get qualified. Nicole Ruth, I'll have her information up here in a second, but get qualified. That's a major step. You know what you can afford. Find a home and create passive income. See, I told you it was simple. So how can we help you get started? Advice is always free. You want advice, we will give you that in spades all day. We are agents. I'm a broker, Atlas. Adam is also a broker. There's probably 25 brokers at Atlas if you don't vibe with one of us, and that's totally okay. We have a Rolodex of vendors. So if you need a water heater replaced, some flooring done, some painting done, a roof, gardening, we have awesome vendors for all that. And property management, as mentioned. Adam, what are the 3 things you need to get started? What do you need to buy a house? All you have to do is read that slide.
Yeah, your down payment. Well, it's right there, so it's pretty obvious. But your down payment, got to have income, and you got to have credit.
This is why we do not want you to quit your day job, because you need income. Right, Nicole?
I'm sorry, I zoned for a second. My bad. I'm just gonna own it.
I only called on you because I have your information up here right now. So for everybody out there, if you want an awesome lender to work with, Nicole and her team are incredible. They're the #1 producing independent mortgage corporation in the entire state. Nicole's also an investor. Nicole, how many units are you up to now?
24.
24 units. So Nicole gets us, she gets what we're trying to do, and she will help you.
Yep.
She totally understands, and she's got like a team of 10 or a dozen people now. They're awesome. They're
One
very
thing that
quick.
I really love about working with Nicole is if for some reason she can't make it work, she'll find the right person that can. Super honest and very creative. Really love working with her and her team.
Oh, you guys are awesome. Thank you.
And Nicole also does a meetup. What's it called? Nicole, the
building
Empire.
Building an investment empire.
Awesome. And are you doing that one virtually?
I am. Second Tuesday evening. So we have one tonight, but I'm actually doing one for DMAR that's 2 hours, starting here in 8 minutes. So I'm going to jump off here in a minute. So everybody that was signed up for tonight, I squeezed them into today. So, but it's usually the second Tuesday night.
Cool. Yeah, I've gone to Nicole's presentation probably half a dozen times. She's awesome, and her team is incredible. So if you're looking for a lender, look no further. Connect with us. We're on Facebook. We're on the Insta for all you kids out there. Meetups, coffee, lunch, drinks. We really want to meet up for coffee one of these days. This is Mike Hills, our VP of brokerage, our managing broker. I told you we were awesome. We were not serious. We just like to have a good time and help people buy real estate and do the same. So I think we ended at kind of a good time, man. We've got some time here for questions.
Yeah, sounds great. Do you want to open up the mute in case anybody has any questions they want to throw at us?
Yeah, let's see. How do I unmute everybody?
So it's all a learning while we go.
Let's see. Unmute. Anything in the chat, Adam?
Nope, we had one question, which was how much are banks requiring to put down for investment/rental properties? And I just quickly answered it in there. Excuse me, 20 to 25% for a non-owner occupied property, AKA an investment property.
Sorry, I was trying to unmute people. Did we answer that one, or do we need to answer it?
I mean, I answered it in the chat, but your standard for a down payment on an investment and rent or a rental property is 20 to 25%. That's for a non-owner occupied property.
Yep, 20% for single family, 25 for 2 and up. But
Got
the
it.
way is to live in one of those, or you can even do FHA 3.5% down multi-unit.
There you go.
Awesome. Any other questions? No questions. 20 to 25%. All right, I have a question. How else can you build passive income?
Good question.
I'm not asking me. I'm asking you guys, by the way.
Anybody want to take a stab? Anybody brave out there? Stocks, Harley, thank you.
Stocks, yes, dividend producing stocks. There are some good dividend producing stocks out there. I own some, but in large part, that dividend payment is pretty small. It's pretty low, and I think right now in the S&P it's 2 or 3%. So again, you can't leverage stocks unless you really know what you're doing, and it's very, very risky. So, so yes, that is one way. Harley, life insurance. Yeah, another way to do it. Cool. Any other answers? Look, more of a rhetorical question. There's not a ton of ways. Okay, right? You can build a business and pay somebody else to run it for you, or sell it and retain some equity. You can have dividend producing stocks, or you can own real estate. I mean, it's pretty hard to build passive income. You know, there are a lot of websites and blogs out there that cater to. There's one called the White Coat Investor. It's all about doctors and how they protect their high earnings that they've earned over their lifetime, how they turn that into passive income. Because, you know, as a doctor, you're working for a check, right? And you have to find a way to protect your value, protect that money, and retire. So a lot of you know, high earners out there use real estate as a way to create passive income. So another question for you guys. What if it all falls apart? This is funny because I wrote this presentation pre-corona, and I had this question in here.
That's awesome.
And now we have a crash, a recession, a depression, and complete Armageddon all in one. So look around. This is it all falling apart. And you know, in a market like Denver, real estate is still pretty strong, all things considered.
Yeah, property values have stayed pretty strong. We've lost, you know, new properties on the market and numbers of properties going under contract and all the standard, you know, data that we get for the real estate world. Almost everything has dropped. However, the prices have pretty much stayed the same.
Yeah, contracts are down, listings are down, showings are down.
Yep.
But prices,
it's a pretty amazing thing.
Yeah, I mean, I don't think anyone really forecasted that, right?
So we just got a question from Stella. Says,
Yeah.
So the trick is to always use an owner-occupied loan for new properties, move into it, and then rent out the previously owned properties. That is exactly what we are saying, Stella.
Yeah.
That is pretty much the definition of house hacking.
I think somebody raised their hand. Do we have a hand raised?
I don't see those. So that
is it Travis?
Travis? Yeah, I clicked it accidentally. No worries, guys.
Oh, okay.
All right.
Cool.
You don't have any question for us?
No, you guys went over the stuff I was most curious about.
Awesome.
Cool. Oh, here's a good one. How are you making money off of me? Really good question. You know, this was free. If we go get coffee, that's free. That's on us. I haven't written a book yet, and I'm not monetizing videos on YouTube. So we really aren't making money off you. As we said before, advice is free. If you do want to go buy real estate, we would like to represent you as your agent. Or maybe you have a piece of real estate that you'd like to sell. We'd like to represent you as your agent. So that's how we get paid traditionally is through agency representation. But if you're a buyer, you don't pay any fees as a buyer. Our commissions are always paid by the seller. So in that scenario, you know, we really don't make any money off of you. We want to make money with you. Although if you do want us to manage your property, and that's not a requirement when you work with us, you can manage your own property. You can use a different property manager. But that would be, I suppose, a way that we do make money off you is through property management. But our rate of 8% is very, very aggressive. It's lower than average, and we have a great reputation in this area for property management.
Fourth year in a row, voted best property management company, Denver Business Journal.
That's awesome. That was awesome. Oh, do we have any other questions? make this our last question, Adam, because I get this objection a lot, and then we'll wrap things up.
Sure.
Okay, Mister. Adam, you're the Mister. Okay, Mister.
Okay.
Where are you hiding the great deals? Right? There's this myth out there. I get this a lot. Like, where are all the great deals? I don't want to buy something that's on the market. I don't want to buy something that's on the MLS. I can see those. I want you to give me the great deals, the awesome ones, the super cash flowing deals. And I'm sure there are a few of those out there, but that's just not the norm. Deals are deals, right? Deals wouldn't be deals if they didn't work as investments. So we talk a lot about hitting solid singles, getting on base, right? You just want to get started. You need to get in the game because investing in real estate is a great investment. Almost always, provided you're not buying really expensive luxury properties or buying out in the boonies. You're following the Atlas investment thesis, right? And I showed you a deal. Was that a great deal? Yeah, it depends on your definition of what a great deal is. This is a chart of Amazon stock of the last 5 years. In 2015, it was $500, okay? Was Amazon stock a great deal at that point in 2015? Or was it just the price of the stock?
Yeah, if you look at it today, it was a great deal, but
Yeah.
you didn't know that then.
That's where it was 2 years later. It was $1,000, right? So when Amazon stock was $500, was it a great deal? No, it was just the price, right? 2 years later, when it doubled in price, it became a great deal at $500. But we can't go back in time. A year or two later, it had added another $500, right? So it was a great deal at 1,000. It was an incredible deal at 500. I'm sure there was a time when Amazon stock was $100, $50, $20. Earlier this year, Amazon stock was up to 2,000, and I don't know what it is today, but I looked yesterday and it was 2,400 bucks. So Amazon stock has been a great deal the entire time because you've made money all along the way. So there's a myth that there are, so-called great deals and not so great deals. And I think if you look at our investment philosophy, and you allow us to help you trust us, and get to know us and how we buy real estate, you'll see that deals are out there. And if you manage them right and buy correctly in the first place, they become great deals over time. It's like Adam's deal that he talked about, where you put down a really small amount of money and now you're cash flowing like $1,500 a month. That's a great deal, but it wasn't a great deal on day one. It was just a deal.
Yep.
Awesome. Well, I think we are up against our time. I just want to thank everybody so much for joining us. We really appreciate it. We appreciate the questions. I don't know if our information is on here. Adam, how do we get our information, everybody? I think we'll just email everybody. If you register, we probably have your details. So we'll just send you a note. Thank you for coming and get your contact information. Feel free to reach out through email, text, phone call, whatever it happens to be.
Great. Thanks, Mike.
Awesome. Thanks, Adam. That was fun.
Thank you, everybody.
We'll see
Thank you guys. Have a good one.
Do it in a month.
Yep. Take care.
All
Holler
right,
if
cool.
you guys have any questions. Might just put my cell phone on the chat.
Awesome. Thanks, Adam. Thanks,
Mike.
everyone.